Well, ladies and gentlemen, my name is Greg McGlosky. Today's date is June 27, 2014. I'm going to talk a little bit about the New Zealand versus yen, the largest mover today. If you like this video, why don't you become a follower or a subscriber to Greg Mike FX on YouTube. We'd love to have you, and then you'll have access to all my videos that I do. Let's take a look at the New Zealand versus yen. And before I do that, let me look at this chart. This shows a percentage change for the major currency pairs today at 8 a.m. Eastern Time. And specifically, I want you to focus over here at the daily percentage change for the yen and for the New Zealand dollar, daily percentage change for the New Zealand dollar. And what these charts show is the change versus the major currency pairs of both the yen and the New Zealand. So for instance, the yen is stronger against the dollar, it's stronger against the euro, the pound, the Swiss. It's stronger against all the major currency pairs. It is the strongest. It has moved the most today versus yesterday's close against the New Zealand dollar, rising by 0.56%. Conversely, the New Zealand dollar is weaker against all the major currencies, and it is the weakest against the yen, having fallen by minus 0.56, the mirror of what the change is in the yen versus the New Zealand dollar. That makes sense. So if you were to look at all the changes in this whole graph here, or this whole, this whole graph, all these graphs here, the New Zealand yen is the biggest moving currency pair. It has had the largest change today. Now let's go to the charts and see what the charts say. If we know that the New Zealand is weaker against the yen, we know that the New Zealand yen is down on a day, and this is a daily chart, and it shows that not only is the New Zealand yen weaker, we know that the New Zealand yen took out the May high, which came in at 89.26 yesterday near the close, and today as well. We traded above the 89.26 level. We moved to, in fact, 89.37 for both these days. But the market could not sustain the rally, or sustain a rally or momentum above the May high and move our way toward the high price for the year, the high price for multi-years, as a matter of fact, at the 89.91. So we had a failure up here. Why do we have a failure up there? Let's take a look at the hourly chart. And what do you notice here on the hourly chart near the high? We notice that there's a trend line with 1, 2, 3 different points. The market found sellers up here against the trend line. Why? Because risk can be defined and risk can be limited against that trend line. That's it. That's it. If the price went above that trend line, I imagine that we would head up to this trend line right here. You know, it's off the screen, but we would be moving up toward that way. The fact that it didn't and the market started to come down is just indicative of traders seeing that there's resistance up here. We failed at the 89.26 level, moving above that level, and we started to come down. We started to see profit takers enter against that high. Now we're down on the day, but we're not that far off of the high. We're currently trading at 88.79. and which is about 60 or 70 pips off of the high here, not that far away. So if you think that the New Zealand yen has hit a peak, what would you want to do? You'd want to sell this currency pair with a stop, somewhere up in this range. Maybe it's against this high right here. Maybe you just leave it up at the 89.37 and hope that off the daily chart we head on down toward, or the trade is that we head on down toward, let's say, this trend line and the 100-day moving average. That would be the trade. Sell with a stop up here with a potential reward down here. That's one option that you have. Another option is what have we done today? We came down, and we came down to the 38.2% retracement. We found support against that level, moved up, and then fell below that level, and on the corrective move to the upside, for the most part, had sellers against the 38.2. So this is interim support at the 88.90 or 80 resistance at 88.94. I could say I don't if this market is going to go down, we shouldn't go back above the 88.94 level. Makes sense? Makes sense to me. In fact, I like that idea. I like that trade. That where the high is in place, we have a resistance area at the 88.94. Sell against that level. Limit your risk against that stop level, and look for further moves to the downside. Now, where are we finding support? We are finding support against the 100 and 200 hour moving average and the 50% retracement. So we're not totally out of the woods yet. We haven't broken below this level. In fact, buyers are coming in against the 200 hour moving average. Why? Because risk can be defined and risk can be limited. So ultimately, we're going to need to see a break below the 200-hour moving average and stay below that level in order for this market to continue down toward maybe the trend line, down toward the low that we saw on yesterday, maybe down toward the 100-hour moving average or the 100-day moving average at 87.32.9. This is a low from yesterday, or low from 2 days ago, I guess it should be. So this would be step number one, to get below that level, also get below this broken trend line. And step number two would be getting down to this level. So that's the evolution of a trade here, folks. It started up here. Traders who shorted up here sorted through maybe below the 26 level, yesterday's high. They're the ones who have great trade location. They're just sitting back and saying, go through the 100 and 200 bar moving average. Don't go above the 94 level. It's the same trade for me. If I want to go short, I sell against here. Put my stop, maybe about the 94, maybe a little bit above that level, maybe even the 89 level, and say, don't go above the 89 level. It shouldn't go above the 89 level. Stay below the 89 level, and see what happens. You're not in control. The market's in control. So might as well just take your shots. Look at the charts. Look what other traders have done today, and make a judgment as far as where the price might go tomorrow. My name is Greg Michalowski. Good fortune with your trading.